Uniswap just made a major announcement that changed a lot for both the project and the Uniswap token. You know Uniswap, it's that historic decentralized exchange built on Ethereum and also available on several other blockchains. Let me explain everything about this proposal, which really came as a surprise. Let's start with Uniswap. Look, you probably recognize this interface. If you ever bought crypto on decentralized exchanges, you're familiar with it. By the way, I don't actually recommend using this interface directly because there's a 0.25% fee, which you can easily avoid by going through DEX aggregators like DeFi Llama, 1inch, and others. Anyway, Uniswap just launched its token several years ago, I think around 4 years back now, and today it has a market cap of around $5 billion. But until now, that token only served one purpose. It was basically a governance token for Uniswap Treasury, used to vote on how funds were distributed. That's it, pretty limited use. There was no fee switch, meaning there was no revenue sharing with Uni token holders. Uniswap had always wanted to implement it, but then decided against it. It was actually part of the early version of Uniswap, like Uniswap V2. This fee switch option existed in the code, but it was never activated because of regulatory fears in the US, the Gensler SEC era. Uniswap Labs, the company behind Uniswap, is based in the United States, and they never turned on that revenue sharing feature, even though at some point, a few months ago, it looked like they were close to doing it. Then it got cancelled. And suddenly, out of nowhere, an article appeared on Uniswap blog talking about unification. So what does Uniswap propose now? This is a proposal. It should still be approved by the DAO, so they should vote on it. But here's what they're proposing. They decided to finally activate the fee switch, meaning revenue sharing will begin. The fees collected will now be converted into Uni tokens and then destroyed. They don't explicitly call it a buyback and burn, but that's exactly what it is, a buyback and a burn model. They probably avoid using those terms for regulatory reasons again. I had actually analyzed the Uniswap staking module back in the day, a few months ago or a year ago, where this kind of revenue sharing mechanism was already being discussed. The idea was that fees would be auctioned off, and to win the auction, you have to pay using a token, though it could be the Uni token. The Uni tokens used for that would then be burned in this proposal, so they will be permanently destroyed by the protocol. That's the big announcement, a real indirect way for Uni holders to benefit from protocol revenue. I'll do a deeper analysis later on how much value that buyback and burn could represent. But there's more. Uniswap also announced updates about the Unichain, their Ethereum Layer 2 network, which has been live for a while now. The fees generated by the sequencer, that central component responsible for batching and including transaction on Unichain, will also be used to buy and burn Uni tokens. So that's another major development. There's more than $7 million collected until now, so this will be burned also. And on top of that, they announced the burn of 100 million Uni tokens from Uniswap Treasury, which corresponds roughly to the amount that would have been burned if the fee switch had been activated since launch. That's huge. It's going to significantly reduce the Uni supply. 100 million tokens burns at current prices, it's around $800 million worth of Uni suddenly destroyed. That's massive also. A very important move for the project and for the token's long-term value. And then they're going to, in a way, merge the Uniswap Foundation and Uniswap Labs, the company and the foundation. The two are going to come together. Almost all of the employees of the Uniswap Foundation are going to move to the Uniswap Labs company. That's a big deal. They're aligning, in fact, the goals of the Uniswap Token Foundation with those of the Uniswap Labs company. They also announced a bunch of other things, including something I've never heard before, which is meant to compensate part of the transactions fees taken by the protocol. They call this builder protocol fee discount auction. Essentially, it allows liquidity provider to earn a bit more money, kind of balancing out the loss due to the new fee switch. That's still a bit vague, so let's look at the concrete stuff for now. The white paper of this feature is missing right now. So, as I said, Uniswap Labs, we're about 90% completion. Never mind. I meant to say this new revenue sharing model is a major change that's going to improve a lot of things. they look, if their tokenomics, they still have a lot of token to distribute, but they already distributed 63% of their tokens. So they have quite a bit left to release, but with the 100 million token burn, that's going to improve this part of their score. The TVL have been pretty stable for a while, but what everyone's waiting for now is the revenue sharing. And if you look now on Uniswap on DeFi Llama, there's around $2.7 billion in fees, yearly fees generated. But these fees are not all going to, will not all go to the token holders. Only a small part will go to the token holders. For instance, for the 0.3% fee, 0.05% will go to the Uni system for buy and burn. Those fees currently go entirely to liquidity provider, but that's going to change. Look, if we're going to look at their blog post, you can see when fees are 0.3%, then they take 0.05% for the protocol to burn. I can show you some numbers also for Uniswap V2, like I said, and for the other pools, they're going to take also a fourth to a fifth to a sixth, 1/6 of the fees generated. They're going to be used for the burn. So that's pretty neat. Huh? That represents, if we take the $2.7 billion fees annually, that will mean approximately around $400 million in fees that could be collected by the protocol and burned, assuming activity stayed at least at these levels, which is a big if, because right now all fees go to liquidity providers, but there are some people who exploit this. They do wash tradings or use meme coin and stuff to increase artificially the volume because they have all the liquidity. So this will disappear, but part of those fees will not, all the fees will not vanish. On the positive side is that Uniswap also announced they'll stop charging fees on the Uniswap website itself, on the front end. Remember at the start of the video I said there was a 0.25% fees when trading directly on the Uniswap web interface? Well, this is gonna stop. Uniswap Labs will stop collecting that fee and focus instead on the protocol level fees I presented you. Honestly, I didn't think it was possible for Uniswap Labs to give up those fees because it's around more than $100 million a year, $150 million a year. They're giving that up, betting they'll make more money through the Uni token, of which they hold a large amount. So the idea is that their growth will now be tied to the token success. To sum it up, from those $400 million in fees, maybe half will disappear because some traders or liquidity providers will move elsewhere. That's possible. But the $150 million that used to be taken from the web interface, I don't believe this is going to disappear, since users were already paying it and they will not notice the change. And they keep trading on the interface. Plus, when you trade through 1inch or other DEX aggregators like DeFi Llama or like I mentioned, if Uniswap is the best route for your trade, you'll still pay Uniswap protocol fees. So overall, that revenue capture will remain significant. So I think they can end up making around $300 to $400 million a year in fees. That's not unrealistic, but that's when people. But that's if people still trade a lot on Uniswap. So the issue now is that people will start valuing Uniswap based on the actual fees generated by the protocol, and then comparison with other apps that make serious money will start. Let's say they generate around $400 million in revenue, like for really the holders. If we look at Hyperliquid or on DeFi Llama, for example, Hyperliquid makes around $1 billion in real revenue, actual money used for buybacks. And they're valued at around $10 billion, so roughly a 10x multiple. If we apply the same logic, 400 million times 10 will give a market cap of around $4 billion. That's roughly where Uniswap stands now, around 5.7 billion. So there was a pump for the Uni token just after the announcement. We saw a 21% increase, even more a few hours ago. It pumped and dropped again. I think the market is trying to find the fair price for Uniswap. Honestly, I don't see why the market cap would skyrocket unless the fees increase significantly. Uniswap is still a key protocol, but what we've learned this cycle from projects like Hyperliquid or Pump.fun, which generates tons of fee, is that size doesn't matter as much as profitability. Look at Aave, for example. It has a massive TVL, but what really counts are the protocol revenues. And apps like Aave or even Uniswap to some extent don't actually generate that much cash flow, which make it hard to justify a high valuation compared to something like Hyperliquid. That's why Hyperliquid is worth $10 billion and even $40 billion FDV, while Uniswap is sitting at $5.7 billion. So even though Uniswap has been around much longer, it's far more well known, and plenty of people know Uniswap, while most have never even heard of Hyperliquid. If you look in some people not well familiarized with perp trading, for example. So yeah, what matters is profitability. Another worrying point for Uniswap is the growing competition. Once Uniswap starts taking a cut of the fees from liquidity providers, many of those LPs might switch to other platforms or DEXs offering better incentives. One competitor in particular, there are rumors everywhere, is Aerodrome, the major DEX on Base, the number one DEX on Base, which has even surpassed Uniswap on that chain. Well, apparently Aerodrome might make an announcement tomorrow expanding to other EVM blockchain, possibly even Ethereum itself. If that happens, Aerodrome could become a real competitor to Uniswap on Ethereum. The question is, will it actually be Aerodrome or will it be another DEX launched by the same team with a new token like they did previously for Velodrome, for Aerodrome on Base? The team has previously launched Velodrome and then they launched Aerodrome on Base. It's the same company that launched both. So Aerodrome is now worth much more than Velodrome, and since they created a new token for it, I believe they will do the same. Anyway, we'll see what happens tomorrow, but overall, competition is heating up for Uniswap, especially when it comes to fees. User and liquidity providers will naturally gravitate towards protocol with lower fees or better rewards. Now, the real question is, can a protocol like Aerodrome compete with Uniswap in the long run? Right now, Aerodrome is indeed competing with Uniswap on Base, but they rely heavily on token inflation. Just look at the incentives. The rewards they hand out are massive. They distributed the ones around $150 million of token every year just to keep the ecosystem running. So when it comes to Uniswap, it literally gives out 0 token. You can see it here on DeFi Llama. There are maybe some occasional incentives on the Unichain, but on Uniswap itself, on the mainnet, on Ethereum mainnet, there's none of that. The real question, so, is will Aerodrome actually manage to compete on Uniswap in the long term? Because Aerodrome is very profitable. It earns more revenue than it distributes. It spends around $150 million, like I said, in incentives, but it generates over $180 million in fees. So still profitable and potentially sustainable over long term, as long as they can maintain that ratio and keep growing the protocol. It's definitely a serious competitor for Uniswap, and it will be interesting to see how things evolve. Another point, if you look at Aerodrome charts, they have really strong looking indicators, if you want. The community is growing, there are no security or audit issues, they have enough liquidity. Of course, there's a lot of inflation, much more than Uniswap, but still, Aerodrome is clearly becoming a real competitor. Let me show you the valuation again of other projects. Let's look at pump.fan. It's kind of Hyperliquid in the sense they do also buyback. They're doing a lot of buybacks. They're doing around $300 million in annualized buybacks and have a market cap of about 2.5 billion. So we're still looking at valuations at 10x to 8x to 10x range. That gives you a sense of how Uniswap could be valued soon. But overall, it's still great news for Uniswap. This was something everyone was waiting for. I also think Uniswap business model is solid. It's not based on token inflation or throwing tokens around like Aerodrome does. Over time, Uniswap can keep attracting users, I believe. Its brand image is strong. A lot of people will continue trading directly on Uniswap. And as DeFi keeps growing, if Uniswap continues to innovate, it will keep attracting more TVL and generating more fees. It just won't be parabolic growth, more like steady long-term progress both in TVL and in the token's value. So it's a solid protocol. It's not a super risky bet, but it's also not something that's going to give you 100x on your portfolio. Aerodrome already has done this kind of 100x. The main question now is how sustainable that kind of reward distribution model really is. So yeah, that's what I wanted to say about Uniswap and the latest updates around it. I hope you enjoyed the content. If you did, don't forget to like, comment, and subscribe, and see you tomorrow for another video. Bye.